Hey there, curious minds, and welcome to the Deep Dive. Our mission here is simple. We cut through the noise, distill complex info, and hand you those essential nuggets of knowledge, fast and thorough. Today we're diving headfirst into the fascinating world of quantum computing, and we're really zooming in on a company making serious waves, IonQ. Now, you asked us specifically to help unravel the, let's say, intricate investment strategy for IonQ, and we're drawing from a really detailed analysis we've got here. Our aim isn't just to tell you what's happening, but to give you a deeper feel for the market signals, pinpoint the risks, the opportunities, and really shed light on what's driving this stock, especially with its interesting connection to AI.
That's right. We'll be looking at IonQ's strategic position, digging into its current technical rhythm, you could say, its financial health, and of course the bigger market forces pushing and pulling it. And importantly, we'll break down some specific strategic scenarios and introduce a unique indicator, VPAR, to give you a really comprehensive, actionable view. Think of it as, well, your shortcut to understanding the why behind the moves and maybe how to act.
Okay, let's really unpack this then. You're about to get some unique insight into a truly cutting-edge sector, guided by a framework we call IonQ. It's designed to help navigate towards a stock's ultimate, let's call it, alpha omega. So IonQ, the name itself sounds a bit futuristic, right? But it keeps cropping up in serious financial talks. What is it exactly that makes this company a leader in quantum, and why is now such a key moment to be paying attention?
Well, what's really fascinating, I think, is that IonQ isn't just, another tech stock. It's genuinely a leader in this quantum space, which is still pretty young but has huge potential. Our sources, they consistently point to its technical leadership. They're right there at the edge. But, beyond the cool tech, this analysis offers a very practical approach for investors like you. It suggests picking a few promising long-term players and then using a strategic two-step entry for swing trading or maybe mid to long-term holds. And this is particularly relevant in the US market, which, well, often seems to offer better probabilities for these kinds of structured strategies.
Okay, so it's not just about the quantum technology itself, but also about a smart, patient strategy for maybe the more thoughtful investor. What's the big picture for IonQ right now, the overall story?
Yeah, the core message is that IonQ, it still holds a mid to long-term bullish trend. That hasn't really changed. However, right now, it's navigating what we call a short-term symmetrical triangle. It's moving sideways. Imagine the stock price is sort of constrained, moving in a tight channel, almost holding its breath, looking for a clear direction. This really sets the stage for what could be a pretty major decision point in maybe the next few weeks, a real crossroads that could dictate where it heads next on its path towards that alpha mega potential.
You mentioned this symmetrical triangle sideways movement. It sounds a bit like the stock is just taking a breather. But my gut says, especially in quantum, things rarely stay quiet for long. Is there something bubbling under that surface, or is it just market indifference for a bit?
That's a great question, and you're right to doubt the indifference idea. Actually, it's pretty much the opposite. This sideways movement, it's a really critical rhythm development and formation stage. Our IGN analysis, it shows the Bollinger Bands are contracting. Think of them like tightening walls around the price. They're squeezing in. This means volatility is getting compressed, and that's confirmed by the Bollinger Bandwidth Indicator, the BW, which is dropping fast. It's a classic sign that energy is building up, like a calm before a potentially much bigger move.
Right, so the stock isn't really moving much up or down, which might look boring, but you're saying there's actually a lot of pent-up energy. That feels a bit counterintuitive.
It does, doesn't it? But that's exactly the kind of insight this framework provides. Look, the RSI, the Relative Strength Index, it's hovering around 50. No clear signal there. And the MACD histogram, it's just sort of fluttering around the zero line. It shows this tug of war between buyers and sellers. But for a stock like IonQ, this isn't just no direction. It's more like a moment of tense balance before things break loose again. Our team, IGNIS, actually describes it vividly as storing energy for the next explosion. So the key takeaway for you is that this consolidation, this sideways phase, it's likely to end with a trend shift, probably around October. That's a really crucial window to watch, a high probability moment for a directional decision.
That's really interesting, thinking of sideways as stored energy. Now, this analysis mentions a specific technique called VPR. What exactly is VPR, and how does it help us, decode IonQ's chart, like a translator for the market's language?
Okay, yeah, let's unpack VPIR. Think of it like a highly specialized GPS for the market. It's designed specifically to pinpoint these moments where a stock might be about to change direction, what we call real-time inflection points or pivot points. Instead of just looking backward, VPR uses a unique index to try and anticipate these turns, helping us improve our timing, basically. The goal is really to boost the probability of making good entries, whether you're swing trading or looking longer term. It's pretty central to how IGNS analyzes market rhythm. Gives us an edge.
So VPR provides these specific signals. Can you maybe walk us through what these circles and X marks mean on IonQ's chart? It sounds almost like reading tea leaves.
Well, maybe a bit more scientific than tea leaves. But yeah, let's focus on what they signal consistently. The circles you might see on our charts, they mark major areas where different short-term trends came together, and importantly, they often preceded strong rallies. So think of them as potential high-probability entry zones, especially in the swing, often shown in white and midterm, often orange timeframes. An X mark, on the other hand, that usually signals a likely rebound point after a VPR trend line gets broken. So, for example, if a short-term trend breaks down within a larger swing trend, you often see a rebound, right at that swing support level marked by an X. High probability there, too. Understanding these VPO patterns and combining them with classic wave patterns, that's really crucial before you actually place a trade. It's about anticipation.
That gives a really granular view. But zooming out slightly, how does something like the classic Elliott wave theory fit in? Does it provide a bigger structure for these VPR signals within IonQ's journey?
Absolutely, that's an important connection. Elliott wave gives us that broader context, the bigger story. Think of it like phases in a race. You have strong pushes forward, like the third wave, which is usually powerful. Then often there's a period of consolidation, maybe sideways movement, catching breath. That's typically the fourth wave. And right now, IonQ is assessed as being in exactly that, a fourth wave adjustment phase. Crucially, this fourth wave often takes the form of a sideways pattern or a symmetrical triangle, which lines up perfectly with what we're seeing on IonQ's chart right now. Once this adjustment phase completes, the theory anticipates another strong push, the fifth wave rally.
Okay, so if we're expecting that fifth wave, that next push, where could it potentially take the price? Are there specific targets we should be looking at?
Well, using Fibonacci retracement, another tool in the technical toolkit, we can identify potential levels. Support for this current fourth wave phase seems to be around the $37 to $39 level. That's the 0.382 retracement level, roughly. That area serves as a key benchmark for potential short-term and swing entries within the IGNS framework. It's where you might consider starting a position. Then, looking forward to the potential fifth wave, if we apply a common Fibonacci extension ratio, say 1.618, to the range of that previous third wave, that projects a possible target zone around $50 to $55. Our sources actually consider that range as the potential starting point for what they call trend acceleration, a significant step perhaps toward its ultimate market, alpha omega.
Ultimate alpha omega, that's
Yeah.
quite a vision. And the charts do suggest potential. But that's looking ahead. What about right now? Does IonQ's actual financial health, the fundamentals, support such a big ambition? Or are there some practical hurdles?
That's absolutely the right question to ask. Technicals are one thing, fundamentals are another. And IonQ's financial health, well, it's a bit of a mixed bag, which is pretty common for companies at this stage, doing groundbreaking R&D. On the plus side, its financial standing is actually very sound in one key respect. It had a 0% debt ratio as of Q2 2025. That's really impressive for a tech company burning through research cash. But the challenge is cash flow. Because they're spending so much on R&D, which they have to do, the operating cash flow is negative, about negative $28 million.
Okay, zero debt, that's great. But still burning cash. What does it actually mean for someone investing, maybe thinking long-term, wanting to see that alpha omega potential realized?
Well, since it's really still in the early days of commercializing its quantum computers, the revenue is pretty minimal right now. It mostly comes from R&D contracts, not selling loads of systems yet. So what that implies is, yeah, the company will likely need more funding to keep growing and developing. Continuous funding is key. Therefore, until that cash flow turns positive, investors need to be aware of the risk of dilution. That means a company might issue more stock in the future to raise capital, which could potentially reduce the value of existing shares. It's not necessarily bad, it's often necessary for growth, but it's a definite risk factor to keep in mind for long-term holders.
And stepping back even further, what about the whole economic climate? These high interest rates we keep hearing about. How do they affect a growth stock like IonQ?
Yeah, the macro environment definitely plays a big role. Generally speaking, a high interest rate environment isn't great for growth stocks that need a lot of cash, like IonQ. Why? Because rising borrowing costs make financing R&D and expansion more expensive. Plus, higher rates can sometimes dampen investor appetite for more speculative long-term growth stories, so it can put pressure on the stock price. On the flip side, if we start seeing signals that interest rates might be frozen or even cut by central banks, well, that could really boost investor confidence in growth stocks again. That could act as a strong tailwind for IonQ. These macro shifts matter.
Right. So beyond the balance sheet and interest rates, what other big risks or maybe potential positive surprises catalysts did your analysis pick up for IonQ? What are the key things to watch?
Okay, on the risk side, a major one is just the intense technological competition. You've got giants like IBM, Google, others, all pouring resources into quantum. So for IonQ, securing strong patents and really maintaining a technical edge is absolutely crucial. Survival depends on it. And that dilution risk we just talked about, that's significant too. It's interesting, actually, automated sentiment analysis often picks up dilution as a negative keyword, so investors are definitely watching that. Now, on the catalyst side, the potential positives, things like potential U.S. government subsidies or big contracts for quantum computing, could be a huge boost. That would help with the cash burn. And also recent announcements about partnerships, like building actual quantum data centers. Those provide real positive momentum. They show the tech is moving towards real-world application.
It's always amazing how much buzz and community feeling can influence a stock, isn't it? Especially in these really cutting-edge areas. What's the vibe online about IonQ? What are people saying? And does that community pulse actually matter?
Yeah, the community sentiment is definitely a factor. Our sources show a pretty consistently optimistic view within the online communities talking about quantum computing and specifically about IonQ. You see this on places like Reddit, Twitter, StockTwits. The overall feeling is strongly positive. The keywords that keep popping up are things like Advantage 2, that's one of their systems, scaling, public sector deals, innovation, and just general partnerships. It shows people are focused on the potential, the perceived advantages, the future growth story, almost like collective enthusiasm.
But here's the thing. Does that online enthusiasm always match up with the sometimes harsher financial realities? Or is there sometimes a gap between the hype and the numbers?
That's a critical point. And no, they don't always align perfectly. It's a really important distinction to make. While the general vibe is optimistic, it's quite telling that dilution also shows up as a negative keyword in those automated sentiment trackers we mentioned. That directly backs up our financial analysis about the need for future funding. So it suggests that while many retail investors are excited about the vision, maybe more sophisticated players or the algorithms tracking keywords are indeed focused on that practical risk. It's that tension again.
And what about the AI connection? Is IonQ just seen as a pure quantum company, or is it getting caught up in this huge wave of AI excitement that seems to be driving so much in tech right now? Does that help or hurt?
That's a really crucial point right now, actually, because these technologies are starting to intersect in the market's perception. IonQ's recent stock price movements, they show a surprisingly close correlation with AI trading patterns. Our analysis found a high covariance, 0.82, with NVIDIA and VDA, which is sort of the bellwether for the whole AI sector. So what that strongly suggests is that the market, including trading algorithms, sees IonQ as part of the broader AI narrative, not just quantum computing, which means its price is likely being influenced, maybe significantly, by trends affecting AI leaders like NVIDIA. It adds another layer of influence, both potential upside and downside, and institutionally. While we haven't seen huge inflows of institutional money yet, if IonQ does break decisively upwards out of that symmetrical triangle we talked about, then quant funds and algorithm-based institutional investors who rely heavily on these technical signals could very well start jumping in. That would be a big validation.
Okay, so we've got this picture. A stock in a holding pattern, amazing tech, some financial realities to watch, and this strong AI connection. How do we pull all of this together into a practical strategy for, someone listening who wants to navigate this? What's the IG&IS action plan here?
Right. The core strategy really hinges on which way it breaks out of that symmetrical triangle. Where does the energy go? The IGNIS plan basically outlines a phased approach based on specific triggers. It's about precision and probability, not just guessing.
Okay, let's get specific then. The price is around $42.13 as we record this. What's the recommended approach right now, especially for someone thinking about that longer-term alpha-omega journey?
Okay, for the immediate term, say between now and mid-October, the recommendation is actually strategic patience. Hold off for a bit. The advice is to wait and see if there are further declines, perhaps considering a first entry, maybe for that mid to long-term view. If the price drops into that $37, $39 range we identified earlier, that lines up nicely with the fourth wave adjustment idea and those Fibonacci support levels. It's about waiting for a potentially better launch pad.
Right, waiting for the setup. But what if it doesn't drop? What if the breakout happens to the upside soon? What's the signal to jump in then?
Good question. For a swing trade entry, looking maybe post-mid-October, if the stock breaks and holds above $44.03, that's the upper edge of the triangle, and does so with noticeably increased trading volume, that would be the trigger. That would be the signal to execute a swing buy, aiming to catch that anticipated fifth wave rally. But importantly, this isn't just about hitting a price. It needs confirmation from our models. We look for what we call TROT resolution, making sure it's not a false breakout. We also need rhythm expansion signals, signs of growing momentum, and confirmation of a high volatility market type to ensure the move has real force. It's a checklist to avoid getting faked out.
That sounds pretty rigorous.
Yeah.
But with any stock like this, especially in tech, risk management has got to be front and center. How do you approach protecting capital here?
Yeah, absolutely paramount. You have to manage the downside. For shorter term positions like that swing trade, a stop loss should definitely be considered if that $37 support level breaks decisively, and especially if the price were to fall towards the next key midterm pivot around $30. A break below $37, heading towards $30, that would signal a pretty clear breakdown of the current technical uptrend. It would force a rethink, maybe a shifting focus purely to long-term risk management or even stepping aside temporarily. The overall philosophy here within IG&I is it's really about selecting quality companies with long-term potential and then applying this disciplined two-step entry strategy for both swing and mid to long-term positions. It's all about maximizing the probability of getting favorable entry points on the journey towards that potential alpha omega.
Okay, so wrapping this up, what does this all mean for you? Listening in, trying to make sense of IonQ. We've seen it's at this really fascinating crossroads, right? Consolidating energy before a potential big move. Techniques like VPAR combined with Elliott wave and Fibonacci, they offer you a kind of roadmap for potential entry points.
Yeah.
But crucially, understanding the financial side, the cash flow challenges, and that strong AI correlation, that provides the essential context you need to manage the risks and opportunities here. It gives you that full picture.
Yeah, this deep dive, it really highlights that complex interplay between the cutting-edge tech, the market psychology, and needing precise technical analysis to navigate it. That period coming up around October and those specific price levels we talked about, $37, $39 support, $44.03 breakout, 50-55 target zone, those are really crucial inflection points to watch. These are the moments where having a clear strategy, maybe guided by a robust framework like IG&S, can really make a difference for an investor looking for that, well, that alpha mega of market insight. It's about anticipating, not just reacting.
It definitely makes you think, doesn't it? As quantum computing keeps advancing, and it surely will, how much will its destiny and companies like IonQ be tied up with the AI revolution? Or will quantum eventually forge its own completely independent path to its ultimate market, alpha omega? Maybe if your next deep dive, you could even explore those questions using an AI tool yourself, see what connections it finds, something to ponder. Anyway, that's it for this deep dive. We really hope this conversation has given you a clearer, more informed perspective on IonQ and this whole exciting but complex quantum investment landscape. Until next time, keep digging, keep learning.